These days, safe havens are hard to come by. Hello and welcome to our channel. Today we will be talking about troubles that economists are continuously worried about. Due to the Fed's rapid rate hikes, stocks have plummeted, Bitcoin is in a slump, and even the formerly hot real estate market appears to be cooling off. Robert Kiyosaki, the author of Rich Dad, Poor Dad, thinks that now might be the best time to become wealthy, despite the temptation to hide out in money. Kiyosaki details how he built a fortune during the Great Recession by defying the norm in a tweet he posted on Sunday. 2008 was a terrific year to become wealthy. Everything was discounted. Bought real estate at a discount using millions of borrowed dollars, he writes. The author has also advocated for a significant crash. In 2013, I released Rich Dad's Prophecy, which predicted an even bigger crash. This is the crash. Millions of people will perish. The well-known author has long promoted buying precious metals as an investment. For millennia, gold and silver have assisted investors in protecting their capital. Unlike fiat money, they cannot be created out of thin air, and global economic events have no bearing on their value. However, this time, Kiyosaki is picking one over the other because of something called the gold-to-silver ratio, which is just the quantity of silver ounces needed to purchase 1 ounce of gold. FYI, the oldest recorded rate for the gold-to-silver ratio is the gold-to-silver ratio for the 20th century was 47:1. 1 ounce of gold is equal to 47 ounces of silver. Last month, he stated in a tweet, today, 85:1. In other words, the current gold-to-silver ratio implies that historically speaking, gold and silver are both comparatively expensive and affordable. Silver is also preferable by Kiyosaki due to its industrial purpose. Silver is a valuable industrial metal. It is not gold. Gray metal is widely utilized in the manufacture of solar panels and plays a crucial role in the electrical control systems of many cars. Silver is a very interesting asset class for investors because of the industrial demand and the hedging capabilities. There are many silver miners that are prepared for an increase in the price of silver. An excellent place to start your investigation should be companies like Pan American Silver, or PAAS, Wheaton Precious Metals, or WPM, and First Majestic Silver, or AG. However, Kiyosaki advises taking a simpler route and just purchasing the metal immediately away. He declares, "I don't touch paper gold or silver EFTs. Anyone can purchase a silver coin for $25. So perhaps it's time to stop by the bullion store down the street." Billionaire Charlie Munger, one of history's greatest investors and Warren Buffett's right-hand man at Berkshire Hathaway, recently prophesied that a terrible crash is coming during the Daily Journal's recent annual meeting. What the nation is experiencing is horrible excess and danger. Everyone enjoys it because it resembles a group of partygoers getting wasted. They are having too much fun to worry about the repercussions. The horrible excess will eventually produce significant difficulties. Historically, that is how things have usually gone. This alarming warning follows his prior one about a lost decade for investors, highlighting to investors that this is an issue that is obviously very important to Mr. Munger. Why would he be worried about the current state of the stock market? First and foremost, interest rates are considerably more likely to rise than fall in the foreseeable future, increasing the force of gravity on market prices. And as his colleague Warren Buffett likes to say, in fact, there is a strong likelihood that interest rates will be pushed noticeably higher if inflation stays hot near its present 4-decade high levels. Second, the potential for generating impressive real returns is becoming more difficult because multiple contractions are more likely than multiple expansions, due to the likelihood of rising interest rates in response to rising inflation. And the high inflation rate raises the bar for corporate growth and dividend payments to generate a real return net of inflation. Equity valuations are already at nosebleed levels. Third, building on the second point, the Buffett indicator, one of Buffett's favorite metrics for gauging how appealing the market is as a whole, shows that the market is significantly overvalued and increasingly likely to produce underwhelming returns going forward. Last but not least, the wretched excess that Mr. Munger refers to in his remarks indicates that there is currently a serious misallocation of capital. possibly as a result of skewed interest rates, extensive money creation, and government involvement in the economy. In fact, Mr. Munger stated, "I would argue venture capital is flinging too much money too fast, and there is a large wretched excess in venture capital and other forms of private equity." At the same Daily Journal annual meeting, "There is a stock market here that some people utilize as a casino. Nothing like what we're doing today has ever existed. We do know that trying to print too much money eventually leads to serious catastrophes because of what has happened in other countries. We are growing warier and warier of a potential market crash and the effects it might have on our portfolio in light of these warnings and a desire to respect Mr. Munger's history of successful investing. Warren Buffett may be worth billions of dollars, but in contrast to other famous people and financial experts, he likes to lead a simple life. The investing legend follows his own advice when it comes to budgeting, setting aside money, and eliminating debt. In tough financial circumstances like now, that pays off. Take into account what Buffett said at Berkshire Hathaway's annual shareholder meeting in May, when he acknowledged that inflation was already one of the major issues facing the economy. If inflation swindles equity investors, he was asked. He responded, "Additionally, inflation defrauds bond investors. The person who hides their money under their mattress is being conned. It cheats nearly everyone." When one of the most successful investors in the world claims it's difficult to succeed in a situation like this, it's probably a good idea to implement some tried and true tactics to limit your budget. Here are some ways Warren Buffett's thrifty habits might help you save and spend sensibly. Number 1, he still resides in the house he purchased in 1958. Buffett originally spent $31,500 for his Omaha, Nebraska home, which translated to around $318,600 in today's money. He has lived there for more than 60 years, unlike many billionaires who bulk up on pricey real estate. But his house is by no means a small one. The 6,570 square foot, 5-bedroom home has undergone numerous extensions and modifications over the years, and is currently valued at roughly $1 million. Security cameras and fences are also used to protect it. According to a letter Buffett wrote to Berkshire Hathaway stockholders in 2010, the mansion is the third finest investment I ever made, and Buffett has no plans to leave. Number 2, he doesn't borrow money often. Buffett had a single mortgage on a vacation home in Laguna Beach, California, which he bought in 1971, even though he undoubtedly had the money to pay for the coastal property, which was listed for $150,000. Number 3, he spends little on breakfast. Buffett could easily order a gourmet breakfast from a personal chef, yet he frequently stops at Mickey D's on the way to work. He claims he'd like to spend no more than $3.17 on his breakfast. In the 2017 HBO documentary, Becoming Warren Buffett, he states, "When I'm not feeling quite so prosperous, I might go with the $2.61 meal, which is 2 sausage patties, and then I put them together and pour myself a Coke." Number 4, he is not a brand snob. Buffett is not particularly invested in expensive clothing or the most recent iPhone model. Instead, he relies on his $20 flip phone for years, until switching to an Apple smartphone in 2020. The Oracle of Omaha avoids frivolous purchases and once advised, "Don't save what's left after spending. Spend what's left after saving." Number 5, he doesn't borrow money to make investments anymore. In my life, I have never taken out a sizable loan. Never. Not ever. In 1991, he informed students at Notre Dame, "I've got no interest in it." Buffett cautions investors against making the same error again, despite the fact that as a young man, he previously borrowed 25% of his net worth to purchase shares. Even seasoned stock traders would admit it might be dangerous to borrow money to invest. With this, we conclude our video. Let us know your views in the comments box. We appreciate you helping us keep it going by watching. The best way to support our channel is to watch another episode. Thank you for tuning in. To ensure that you never miss an episode, please subscribe to the channel.